Okay, good afternoon. I'm Catherine Howarth of ShareAction, and the part of the financial system that we focus on at ShareAction is the pension fund system. So I'm going to spend my 10 minutes looking at that. It's a big system. In the UK, we have £2 trillion tied up in private pensions. They are there for our individual and collective benefit so that we can retire, hopefully in some kind of comfort one day. But like other parts of the financial system, it is not serving us very well. It's not making nearly the positive difference it could. And in fact, as many of us are sort of more or less dimly aware, a lot of our savings are invested in some pretty destructive enterprises. And the oversight by our pension funds of companies has historically been extremely weak. In fact, pension funds have a kind of agnostic view of companies. They just see them as blobs in the economy from which they can extract short-term profit. They do very little to think about what are those enterprises really doing. And now and again, kind of anxious, morally concerned individual pension fund members object to that, and they, for example, challenge their pension fund about investing in tobacco companies. But actually, it's a much, much bigger problem than just tobacco companies. Those kind of questions about what are the underlying enterprises doing are questions that should be asked of entire pension portfolios. So pension funds have been very kind of weak in their oversight of companies and taken a very narrow view of what companies are there for. But I'm afraid our oversight collectively has been very weak of our pension funds. We have historically, as civil society, not had an eye on where the money flows, what's done with it, what kind of stewardship is undertaken of our pension savings. So in a small way, that is what we're trying to change at ShareAction. We're a coalition of trade unions and NGOs who are beginning to acknowledge what happens to our pension savings is extremely important for our individual and collective future and well-being, and we really need to get a bit more of a grip of it. Let me describe some of the problems with the system. One of them is that pension funds have fiduciary duties to act in the best interests of the underlying members, and they have interpreted those duties extremely narrowly. So there's this myth of a single monolithic duty is to profit maximize on behalf of the beneficiaries. And sometimes one of the things we do at ShareAction is we have these online tools where individual savers can send an email to their pension scheme. And we did this a couple of years ago when we had shareholder resolutions at BP and Shell querying the kind of financial risks as well as the environmental and social risks of long-term investments being made by Shell and BP in tar sands in Canada. And the trustees of many people's pension schemes would just reply to them saying, well, we can't take account of this because we've got our duty to profit maximize. So, it's this terrible narrowing myth. And actually, that myth has contributed, I think, to making us all less safe. Far from being kind of a prudent position, which is what they think, it's very much what's led to bubbles and systemic issues, and as well as being, of course, completely irresponsible and unhelpful in terms of encouraging pension funds to drive innovation, coming back to some of the comments that we've just had, and certainly to think about companies taking a more responsible, pro-social approach to what they do and how they go about it. So we have put quite a bit of time into challenging that, and there is increasing acknowledgement that the interpretation of fiduciary duty is wanting. And encouragingly, the Law Commission, which is the collection of our nation's cleverest, hopefully best, lawyers who consider legal concerns and problems in the law, are having a root and branch look at investors' fiduciary duties. And our recommendation is that the law needs to be clarified so that trustees can take a wider view of what acting in the best interests of you as pension savers is. Yes, it's about securing a financial return, but not at the expense, for example, of destroying the environment along the way, in a way that will then actually deeply damage financial returns and the well-being of the underlying savers, taking a wider view. So another problem in the system is that we have very limited rights to information, let alone being consulted actively by our pension funds about what they do with our money. So I mentioned these little online tools we have where people send messages to their pension fund. Very often they get the most hideously unsatisfactory answers, just saying, well, we're looking after your best interests, so go away, leave it all to us. You don't really have any right to find out a bit more and dig under the bonnet of what we're doing on your behalf. So another little project of ours is looking at sort of democratizing investment and trying to look at some of the solutions, including overseas. In Denmark, pension funds hold AGMs where the savers, the members of the scheme, can go along and ask some robust questions about how their money is being looked after on their behalf. Coming back to an earlier comment, I think our big problem is that we haven't been organised, we haven't been watchful, we have really been quite happy to hand over the money and let other people control it on our behalf. So another little scheme of ours is Workplace Responsible Investment Champions. If any of you are in a workplace where you would like to be part of nudging your pension scheme to ask them strategic questions about what they're doing on your behalf and how that money is used in a responsible way, then you can become a Workplace Responsible Investment Champion. Okay, what would a better system do? A couple of things. Pension funds could really start to act as responsible owners. A project we've had for a couple of years is pushing pension funds to be active in favour of UK companies, listed companies, major ones, and FTSE 100, becoming living wage employers. And we have a new national pension scheme which is coming onto the scene called Nest as part of pensions auto-enrolment. Pensions auto-enrolment means that 6 to 9 million more people in the UK economy are about to become pension savers, indirectly will become stockholders in all sorts of companies. And Nest is alert to the fact that its own members will mostly be people on very modest incomes, many of them not actually earning a living wage, just more close to the minimum wage. And interestingly, and very encouragingly, because it's kind of a break with the way most pension funds look at the world, Nest has put out its voting policy and is saying that they explicitly expect and wish to seek to push companies they own on behalf of the underlying members to become living wage employers. So kind of an interesting joined up bit of thinking by Nest. But the other thing that pension funds would do is start to look at systemic problems that imperil our future prosperity. We've had some amazing talks this morning about banking. Pension funds owned huge amounts of bank shares. They were totally asleep on the watch. In fact, they were worse than that. They were aiding and abetting excessive risk-taking by banks in the build-up to the financial crisis. The pension funds should be absolutely at the heart of the debates we've been having this morning about what would make a safer banking system, what would make it systemically safe. Are they? Completely missing in action. So one of the things we need to be asking our pension funds is to be part of the debate about what would make the system that they're participants in a much safer one. And then, of course, there's climate change. Pension funds have hardly heard of climate change. That is bad news because they're looking after your future savings and your well-being. So we've got an upcoming project we're beginning to work on. It's going to be a 3-year project to transform pension funds into being responsible about the challenge of climate change. And that will look at carbon-intensive portfolios. Our pension funds are absolutely ram-packed full of heavy fossil fuel companies. That's bad for the planet, but it's looking, as Carbon Bubble have shown in their wonderful work in this area, potentially very financially risky as well. But looking at the green investment gap, what should our pension funds be doing to help fill that gap? Obviously, it's going to be about public investments as well in innovation in that space, but our pension funds should be part of the story. They have a lot of capital, and that could be local as well. I think there are many people probably in the room who quite like the idea that a small part of their monthly pension contributions would flow into local renewable energy projects, retrofit, things in this economy that would make a difference environmentally and socially. Are pension funds in that space? Absolutely not. But a little bit they could be if we demanded it. So my kind of closing thought is that it's kind of up to us. We have to be organised and assertive and define what we want from our pension funds and then campaign to get it. Okay, thanks.